Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting on the weekly time frame with the bullish scenario here, where we're looking for a double 1-2, after which we expect continuation. Wave 2 over here retraced to the 0.382 Fibonacci, taken from the low to the high, which is a less common target for 2, bit more common for a wave B. And for the second wave 2 here, we are looking for a retracement in the most common target area, which is between the 0.5786 taken from the low to the high of 1, giving us a target area between 37k and 30k. The 302 once again is a less common target. You can see it has been hit, however it has not been hit inside these fib times over here. Now these fib times are taken from the low to the high as well, and preferably a wave 2 will at least end after the 0.382 fib time, which is sitting on the 19th of February. Now, something that is important here as well is that the yellow count is the higher degree Elliott Wave count, and then inside the yellow wave 3 we have the green count 1, 2, 3, 4, 5. Preferably with a lower degree count being the green count here. Wave 1 and wave 2 are shorter in price and time. This wave 1, however, is longer in price but shorter in time, so it's not ideal, but it can still work. And that is why we also still have this scenario on the chart over here, which is very long in time. That is the negative aspect of this particular scenario, but this move is now labeled a wave 3, being longer than 1. That's absolutely fine. So in this bullish scenario, we are looking for a wave 1, 2, 3, 4, 5. Most common target for 4, 382 to the 05, taken from the low to the high, giving us an area between 39.8k and 37k, with the 0.618 being the invalidation for a wave 4. Preferably, this wave 4 ends after the 0.382 fib time, taken from the high to the low of 2 to the end of 3 over here, to compare 2 with 4, with the 382 sitting on the 4th of March 2024. After wave 4, we want to see another impulsive structure to the upside in a wave 5. Common target areas, the 1.236 to the 1.618. I pulled it from the high of 3 to the 05 over here, giving you then a target area between 51.9k and 56.5k, after which we want to see a retracement to the downside in a wave 2. I pulled the wave 2 target area from the low of the move over here, right, to the high at the 1.618, giving us then a target area between the 05 and the 786, which is between 36k and 24.4k, after which we then want to see continuation to the upside. With every bullish scenario, there's of course also a bearish scenario on the same time frame, which is the ABC to the upside over here. A finished, B bouncing on the 0.382, common for B, less common for a wave 2, that's something we do have to remember, and then we look for a wave C to the upside. Common target area for C is between the 1 and the 1.618, taken from the low to the high of A to the low of B, between 40 and 50k. That's very nice. That is where we are at the moment. And time-wise, wave C preferably ends between the 0.618 and the 1.618 fib time, taken from the low to the high of A to the low of B, which is an area between the 4th of December last year and the 22nd of April. After a wave C, we of course want to see impulsive continuation to the downside, as we are looking for price to take these lows. If we then jump to the 4-hour time frame and look locally at what we're expecting here, right, then from an Elliott Wave probability point of view, probabilities would be higher to still make a new low inside this target area for a B or 2. We have this move to the downside over here, right, and we are now retracing. Highest probability is a 3-wave structure to the upside for then continuation to the downside. Now here you can see that wave 1 or A is finished, so we are looking for a retracement in B or 2. This low over here just missed out on hitting the 382 Fibonacci, taken from the low to the high, and this low was also made before the 0.382 fib time, taken from the low to the high. So preferably from an Elliott Wave perspective, you want to see price dropping in this area over here. It is quite rare for price to not at least hit the 0.382 Fibonacci, but also have the low before the 0.382 fib time. It can happen at times, absolutely. If price does move towards the upside, then the probabilities are higher for a wave A, B, and a wave C because of the very shallow retracement. Common target area for a B is the 382 to the 886 area, 41.839.1. Common target for 2 is the 05786 area, 41.1 to 39.6k, and the invalidation is this low over here. So if we then zoom in to this B or 2 over here, this section of the chart, then one of the scenarios to get lower prices is a flat structure where we are looking for a 3-wave A, 3-wave B, 5-wave C, and inside B we then look for a 3-wave zigzag structure, which is most common. Common target area for a wave B is between the 1.236 and the 1.38, sitting between 44.6k and 44.3k, taken from the high to the low of this wave A. We do have to be careful, however, because if price does move to the upside over here, we have a gap on the daily time frame. We have been testing this gap for such a long time now as well, that if we do enter the gap, well, the target area for your flat is in the middle of the gap, and what price does like to do is once it closes candles inside the gap, daily candles in this case, it likes to fill the gap. So the gap filling means 45.5k, where we also have the golden pocket taken from the high to the low, but that would be of course far above the target area for wave B. Therefore, what is very important is that we observe the reaction if price would move towards the upside. We want to see weakness, we want to see proof of resistance. We do have some additional resistance in this area, 43.9 to 44.7k, but as mentioned, it is in the middle of the gap, and we also have some resistance above between 45.9 and 46.7k. If we then zoom in inside this wave B and we look at the 3-wave structure to the upside for this wave B, then we are looking for a zigzag, right? In a wave A, B, and a wave C, 5, 3, and eventually a wave 5 towards the upside. In this scenario, you can see that wave B is at this low over here after then a WXY structure inside this wave B, creating a 1, 2, and continuation. But clearly, this wave 2 retraced to the 0.886, which is rare for a wave 2. Then also, if this is your wave 1, it is a very long wave 1. If this is a wave 1 of your wave C, because the target area for your C is this box over here. And if this is your wave 1, with the wave 3 target area usually being like the 1.618, somewhere up here, probabilities are not that high that this is gonna hold, of course. A second scenario, which arguably is more bullish, is a big WXY, as in this scenario we are then looking for that A or 1, and then we have a WXY complex sideways corrective structure for continuation in a wave C to higher prices. In this scenario here, we then have our wave WX looking for a triangle in wave Y. After wave X, we got a 3-wave move to the downside over here, and locally this move to the upside can also be counted as a 3-wave structure at the moment. There is still the potential for a double 1-2 here, as long as this low isn't taken. That's something we do have to keep in mind, which of course would be very bullish. But here we are looking for a triangle structure. Now, of course, it is still very early to look for a triangle here. We only have our wave A and then our wave B, and we are then looking for a C, D, E, and then eventually continuation to the upside, which basically means we are going to be stuck in this range for even longer. So let's hope that that is not the case. Second scenario here, we are looking for another WXY, but here wave Y is already finished. In this scenario, wave Y, however, is quite short. Now, wave Y doesn't have a necessarily time relationship with wave W. It can be very short, it can be very long, it doesn't really have a minimum time or a maximum time. However, most commonly a wave Y is finishing between the 0.618 and the 1.618 fib time of wave W, and if we take a fib time over here being the 382 taken from the high to the low of W and put on the high of X to compare W with Y, you can see that wave Y ended before the 0.382. So this is something we have to keep in mind, but in this scenario we could then be looking for wave 1, 2, 1, 2 and continuation to the upside, which of course would be most bullish, and higher prices are then definitely expected. In the most bearish scenario, we are looking for also a wave W, X, and then a wave Y to lower prices, within wave Y a zigzag. This means that wave W has to be a flat structure. The only reason this can be a flat is because this retracement here hit the 0.9 Fibonacci taken from the high to the low over here, which is a minimum target for a flat wave B. Then we are looking for our wave X on the high, and then we have a wave A, B, and we're looking for a wave C to the downside. Now for this wave C, we want to see impulsive structures to the downside. So we need to see a wave 1, 2, a couple of 1, 2s here, and eventually you want to see impulsivity to the downside. Of course, if price retraced too high over here, it lowers the probabilities for a wave C. Something else to keep in mind here is that this wave B is about 9 times longer than wave A, which is not pretty, right? It's not that common that a wave B is so extremely long compared to your wave A. The problem is that this wave A cannot end over here, because in a wave Y you are not allowed to have an internal WXY structure. So we can't have over here the low for then a 3-wave structure and then a W, X, and a Y inside wave Y. So we then have to put A over here, need to put B here, and then we look for a C to the downside. Inside this wave B, we are then looking for a flat X zigzag to the upside, where the high of this wave W is made before the 2 Fib time. This is important because if we are looking for a flat A, B, C in W, then wave C is not allowed to be longer than twice the length of A plus B, which is then the case over here. If it is, it really lowers the probabilities. However, if this is the high of your W, meaning the end of your C, your wave C, not too sure, right, about this. You have this is a higher low over here, so you then have a 1, 2, arguably a couple more 1, 2s here. Then you have a 3, 4, 5, 4, 5 type of move, right? So there is the potential at least for some sort of a wave C, but it's not too pretty, but there's definitely potential. So that is why we keep in mind this scenario over here. If we do see continuation of bearish CVD divergences locally, which we do have all the time at the moment. So that is definitely a scenario to at least keep in mind. We also lost the point of control of this range after hitting the resistance over here, right? The white box here on the chart, resistance between 43.2, 43.3K, resistance above 43.4, 43.6 together with the value area high. And then at the bottom here, we have support 42.4K and then 42.2 to 42.3K. That is the white box area. I already shortly mentioned the CVD divergences. We have bullish CVD divergences here that didn't yet play out. Target would be the high, invalidation taking the low. Then we have over here another bullish CVD divergences, higher low on price, lower low on the CVD. Target is this high over here. However, we do constantly have bearish CVD divergences here, which of course we like to see invalidated. And while talking about it, this one over here is now invalidated. That was a 5-minute bearish CVD divergence because price took this high over here. So this one can now be removed from the chart. These already played out, but keep an eye on the CVD divergences. So on the 5-minute, the one that is now invalidated was this one here, lower high on price, higher high on the CVD, right? So that was a 5-minute one. You can see that especially blue is moving up. So now blue is having a bearish CVD with this 15-minute candle. So you definitely want to see price continuing to the upside to invalidate these small bearish CVD divergences. So if we then look at the probabilities of the different scenarios, then on the high time frame we're pretty much neutral because we wait for more information. We do have a 382 bounce at 24K, so that would increase the probabilities a little bit for that low to be a wave B compared to a wave 2, but the 382 is still a target for a wave 2 as well, of course. So therefore, what we're looking for is a bit more information, as especially locally, nothing is confirmed yet. Then if we look at this range over here, right, we spoke about a few scenarios, but just very shortly a few things more to say. If we are looking for a flat structure that's already finished, wave B minimum target is the 0.9 Fibonacci, which has not been hit. So we can't get wave C structures to the downside here. If we look for a double zigzag in a WXY double zigzag to the downside, that is not valid because price hit the 0.7, really lowering probabilities for a double zigzag. And if we look at a WXY with a flat in Y, then we have a wave W, X over here, WX, and then a triangle in wave Y inside this wave X. And then we look for a wave A, B, and a wave C. This wave C, the only remaining option would be a diagonal and then a wave 1, 2, 3, 4, 5. But because your wave 2 retraced so high compared to your wave 1, it really lowers probabilities for a diagonal, because your wave 3 is very likely to be longer than your wave 1, which lowers probabilities for a diagonal as well. So on the low time frame, if we zoom out to the 4 hour, right, the probabilities at the moment would still be higher to look for a B or 2, right? So still for a drop, of course, we have the flat structure to keep an eye on. And if price does move up, we observe the reaction, because we might get continuation to the upside, no? Or you have the WXY structure, where in that wave Y we are then looking for a wave A, B and a wave C. It's not the nicest, prettiest scenario here, but at least it is something we have to keep in mind. On the micro over here, when we do look at this range, right, then the probabilities at the moment are a bit higher to continue this range. Yesterday I mentioned when price was up here that locally we have higher probabilities to continue this range or see at least a bit of a retracement. Now we got the retracement over here. Always good to continue looking at what the range is gonna give, because this is a very, very complex range, which is very interesting. It's lovely to puzzle around. So we're gonna keep an eye on the local price action here, of course, which will give us a lot more information about what is coming next. And that is then also what I write over here, right? So the probabilities here are a bit neutral as we fell back down inside the range. We're below the range point of control as well, right, over here. So it would be nice to flip that one again. And we just therefore observe what price does and then reassess the probabilities once again. So I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.